The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Ben Boulos. These are your headlines. BP's second quarter numbers hitting the tape now amid continued energy price volatility and as the company looks to market its North Sea business. We'll bring you the numbers and speak to CEO Meg O'Neill in her first broadcast interview since becoming CEO just in a few seconds' time.
President Trump insists Iran talks are underway despite Tehran's repeated denials, with oil cautiously recovering from a 3-week low. The US leader hits out at windfall profits in the sector.
They're making too much money, okay? Based on a shortage, they're making too much money. I don't like it. When you look at one company where they made 12 times what they made the year before, they ought to give some of that back to the public, and they better cut the retail price.
The White House prepares to host AI leaders today for talks on cybersecurity as Palantir CEO Alex Karp deepens his attacks on the leading labs in an exclusive interview with CNBC.
We have people trying to drug addict us to a future they believe they control. Now, I've spent a lot of time with Dario and the EA crew. They want to tell you we have to march into a future where we own nothing, where our businesses aren't profitable, where none of us have jobs, and where our adversaries win.
A big earnings day here in Europe and BP numbers just crossing the tape. Second quarter operating cash flow has been reported at $10.85 billion. The net income line, $3.91 billion, and you've got adjusted net income of $5.73. This is versus estimates of a lower number of $5.01 billion. So the numbers just hitting the tape, and also some announcements here announcing their intention to sell Share. This is their biogas business in the United States. Operationally, their plans didn't run as well as they did last quarter. So let's get into the news flow with Meg O'Neill, CEO of BP. Meg, thank you so much for joining us. This is the first quarter since you took the reins. So as we dive into the numbers today and digest them, also coming at a time when there is instability in global energy markets. Just explain how things looked at from your lens in the quarter.
Well, thanks, Karen. It's a pleasure to be here. The numbers are strong. So underlying profit of $5.7 billion. That's $2.5 billion higher than the first quarter. That's underpinned by strong performance across the group. So upstream production of 2.2 million barrels oil equivalent per day. We refined about 1.5 million barrels of oil per day. And the downstream fuels value chains, underpinned by our world-class trading organization, has made sure that we've delivered more value for every barrel we produce. Now, the real impact that I want to highlight is the impact it has on our total financial liabilities, which are down $7 billion from the previous quarter. That comes through paying down a number of different sources of financial obligations. We're taking steps to high-grade our portfolio, and that's all in the service of generating long-term shareholder value returns. Obviously, we have more work to do. I've laid out 5 priorities in my statements to the markets, starting with strengthening the balance sheet and high-grading the portfolio, but a lot of work to do. I'm optimistic. We're moving at pace, that we are headed in the right direction, and maybe the banner to describe it is we're getting fit to grow.
Just to that point, Meg, let me ask you about some of the divestments. You've tallied it up and expecting divestments and other proceeds to be about $8 to $9 billion through 2026. We know what has been flagged. We heard about biogas this morning, but the North Sea, which is very much part of the energy security story potentially in the UK, and we've got a new government in place here as well. Is there anything that Andy Burnham could say that would keep the North Sea in play for you?
Look, if we step back, the North Sea has been very important to BP for more than 50 years. It's a great basin, high-quality oil and gas resources. But when we look at how it fits into our portfolio today, it just doesn't compete for capital. Now, that said, there are plenty of other players that have approached us unsolicited, expressing interest in the basin. And so I am very optimistic that the assets that we have today will continue to be profitable in the hands of a future owner. I've had a conversation with the Prime Minister where he reinforced his desire to work closely with business, to be pragmatic, pragmatic. And the message I left him with was, the UK gets 75% of its energy from fossil fuels today, so that's oil and natural gas. The first barrel of oil we consume and molecule of natural gas we need should be coming from the UK North Sea, where we generate jobs, we generate tax revenue, we generate all those additional positive impacts.
Noted. Meg, I want to get to the politics stateside as well, because in the headlines in the last 24 hours, the US president again taking aim at oil chiefs stateside. I know they have a bigger market share when it comes to the retail presence there. But that said, the accusations from Trump is that in this period of time when fuel prices have gone up, that US oil companies are making too much money off the back of US drivers, US consumers. Is he making a strong case? Is that what's playing out in practice?
Look, I understand the pressure that the ordinary household feels when they pull into the service station to fill up and see the prices. The reality is we produce a global commodity, and the product we sell hangs off the prices for the product we sell hangs off that global commodity price. What BP is doing is making sure that we are focused on the things we can do to try to help address the situation. We're driving hard on reliability, both in our upstream assets where we produce those barrels and the refining assets where we refine them. We've made adjustments to how our refinery runs are set up to try to make sure we're maximizing the products that consumers need at any point in time. And by way of example, we've made some shifts to try to produce more jet and diesel because those are the commodities that are in even shorter supply than gasoline. So we are doing what we can. Our world-class trading organization is also playing an important role to try to get products to customers as cost efficiently as we can, to play our role to try to tackle those prices at the pump.
Meg, it's Ben here joining the conversation. One of the big headlines so far this year around BP has been the fate of the chair, Albert Manifold. Just give us an update on where things are with that and in terms of the search for his replacement.
Yeah, thanks for the question, Ben. So the search is underway. The board is looking at a wide range of candidates. But what I think is really important to reinforce is I have the full support of the board. The priorities that I laid out today, strengthening the balance sheet, focusing the portfolio, strengthening capital discipline, improving underlying operating performance, and driving a culture of accountability. Those priorities are supported by the board, and my team and I are focused on delivering and moving at pace to deliver a better outcome for BP and our shareholders.
Do you think the business is in a better place after his departure?
Look, we've said what we need to say. I'm very focused on delivery. The reality is we've got 90,000 people around the world who are playing a role to try to make BP a stronger company every single day, and I'm focused on supporting those 90,000 people.
I just want to pick up on the point that Karen made about the new UK government. In terms of the conversations you've been having, do you think there is any prospect of Andy Burnham in his role now as Prime Minister of picking up that hint from President Trump that the UK should be exploiting the North Sea oil and gas fields even more, regardless of your decision to sort of divest the businesses there that BP has?
Yeah, I'll go back to the number I cited, which is the UK is still using a huge amount of oil and natural gas every single day. And we ought to be using our domestic resources first instead of buying those resources from a third party. I think the new Prime Minister has come in with a focus on being pragmatic and with a focus on understanding how communities around the nation can benefit from developing local economic outcomes. So if you look at Aberdeen and you look at that region, we've historically had a very robust economy of smaller companies that support our industry. It's not just the 1,000 jobs that BP directly has in the North Sea, it's the thousands of jobs that hang off that. I'm hoping that there'll be a pragmatic solution that allows the North Sea to continue to prosper for decades to come.
Meg, I want to just switch the conversation to renewables while we have you, because there's been a fairly significant retreat in recent years for BP from this net zero approach, and what that has meant is the sale of certain assets. Lightsource, for instance, the solar business has been on the block. Where do you think the priority is for renewables in the overall business?
Yeah, let me say two things. So first and foremost, climate change is an important global challenge, and everybody has a role to play. Governments, big companies like ourselves, individuals all have a role to play. And that manifests ourselves in BP with things like our emissions reduction targets. We're aiming for near zero methane. We've got emission reduction targets out to 2030. So we're very much focused on doing our business sustainably, and where we produce oil and gas, we need to make sure we're doing it in the right way. Now, that said, when we look at some of the investments we've made, they've not delivered the returns that we expect. And the reality is there are other companies that are more specialized in some of these products. So things like utility scale solar. There are other companies that are focused on investing in those areas. But we are making investments in reducing the emissions intensity of our business. For example, we're building green hydrogen facilities at 2 of our European refineries. That brings our emissions down and is good business. And that's the intersection that we're going to be pursuing going forward.
Right. Meg, thank you so much for joining us. We've got to let you go. I know you've got a busy morning and we do appreciate the time. Meg O'Neill with us, CEO of BP.
Well, we've got a busy show ahead, and coming up, SpaceX is set to report its first earnings as a public company after the bell today. We'll preview what to expect. Plus, we'll speak to the Bank of Ireland CEO after the bank reported bumper earnings. And Continental posts a second quarter beat on resilient tyre demand. We'll speak to the CFO at 8:30 London time.
I'm Steve Sedgwick from CNBC, and in my new podcast, Executive Decisions, I ask powerful leaders about their decisions that changed everything.
I'm not frightened of making tough decisions, and I think leadership can be very lonely.
Business leaders should not stay quiet in a world which is super complex.
It is absolutely fine to also change your mind.
Tough calls, personal crossroads. These are the stories that we can all learn from. It's Executive Decisions from CNBC. Get it wherever you get your podcasts.
To the latest around Iran, and President Trump said last chance talks were underway with Iran Monday, but officials in Tehran denied any direct negotiations were taking place or planned. The US president's comments followed his decision over the weekend to cancel what he called, quote, massive attacks on Iran. Speaking to reporters in the Oval Office, the president claimed talks had been backed by countries including Saudi Arabia and the UAE.
If we're not talking, when you ask me, no, we're not talking, I'll say it. But we are talking right now, we're talking at the request of Iran, backed by Saudi Arabia, backed by UAE, and backed by Qatar in particular, but others also. Many countries called, the leaders of many are friendly with a lot of them, almost all of them, one way or the other, and they all wanted to give this a last chance. This is a last chance. This is not something that, if it doesn't happen, this is a last chance for them to sign a good document.
Well, Democrats are seen as better stewards of the US economy over Republicans for the first time in nearly a decade, according to a Reuters Ipsos poll. 37% of those surveyed picked Democrats, securing a 1-point lead over the Republicans. The poll also showed President Trump's approval rating falling near to its lowest of his term so far, at 35%. Later today, Treasury Secretary Scott Bessent will be speaking to our US colleagues. You can catch that interview at 12:30 London time.
Let's take a look at those US markets and what we had stateside. A rally playing out across the board from the Dow at fresh records, which stole the headlines, but bigger bounce elsewhere for the Nasdaq, more than 2% in the green as tech stocks roared back. And even for the contributor to the Dow, it was Microsoft. That was one of the big drivers, along with Alphabet. Those two tech names really powering ahead in session. The show and tell around earnings season, and just who's proving a winner from AI at this point. Very much a driving force on US markets yesterday. A bit of data too. Don't forget, we saw the manufacturing activity rallying to its highest level in more than 4 years in July. So again, another positive catalyst for stocks stateside. And for the Asian market, we've got the Hong Kong market under pressure. That is down 0.8 plus. A couple of reporters today out of that market impacting the direction of trade, but we've got a bounce back on the Kospi. It was down heavily yesterday, about 5%. We've recovered some territory, about 1.4 to the upside today. So more stable picture playing out. And European futures, the early picture today on the back of what was again a decent rally here across Europe yesterday. The DAX was up about 1.5%. We are chasing more upside, so it does look like we're firmly in rally mode.
Travis Perkins is reporting results this morning, posting around £30 million in net profit in the first half and expecting a similar performance in the second half as the UK home improvement retailer pointed to unpredictable building material inflation. I'm delighted to say Gavin Slark, the CEO of Travis Perkins, joins us in the studio this morning. Gavin, very good to see you.
Good morning.
Just talk us through these results then and what you think they tell us about the current state of the UK consumer and the housing market.
Okay, really interesting point. I think if you look at our results, first of all, after several years of profits going backwards within the Travis Perkins Group, we've stabilised the profitability of the business, which I think in an uncertain market is a really solid performance. I think the really outstanding point from ours is the work we've done on the balance sheet. So if you look at the net cash that we have before leases, now we've got about 55 million of net cash, and that's over 150 million better than we were at this point last year. In an unpredictable market, a strong balance sheet is a really good place to be because it gives your suppliers, it gives your customers, and it gives your colleagues a real sense of stability that the business can cope with whatever the market throws at it. I think in terms of construction in the UK and the DIY market and how that looks, I think really what consumers are looking for is some consistency in the market. If you're going to invest in your home, if you're going to invest in your business, then you want to see some kind of construction and infrastructure policy from government that gives you a medium-term view, that gives you that confidence to invest either in your home or in your business going forward.
With that in mind, picking up on that point, the new government, do you feel it's going to be better or worse for you as a company than the previous administration?
I think better or worse. I mean, it's the same party. It's a different person at the head of it.
A very different, a different tilt, a different colour of
I agree.
So,
no, I completely agree. And I think from my perspective, what I think we need to see is a lot of the government departments working together. So it's not just about planning. It's not just about material manufacturing. It's not just about the skill of the workforce. It's about enabling where people are going to build homes to have the infrastructure, to have the electricity, to have the water, to have the superfast broadband, to build homes that people want to live in and to have the infrastructure that can support those communities. And all of those departments, if they can work together and give us a cohesive medium to long-term plan, that I think is what we really want to see from the government, so that when we're looking 3, 5, 7 years out, we have a degree of confidence that in 12 months the plan's not going to change again.
It feels as though there's a communication issue as well. I mean, the market looked like it was up and running again in recent months and then quickly just shuddered to a halt as Andy Burnham was talking about changes to taxation for the property industry. He's now ruled out some of that at this point, plan changes, no immediate changes to stamp duty or council tax. Does he need to be very mindful of the messaging about stability around taxation?
I think he does, because I think most people, if you're sitting at home this weekend and thinking about building an extension or thinking about moving home, committing more on your mortgage, you want to have some feeling that there is some stability and consistency going forward. And I think the confidence, both from a consumer point of view and a business point of view, if we can get that consistency and that view of a medium-term plan that isn't going to change, then everybody just feels a little bit more confident. So I think communication is absolutely key. So
earlier you mentioned, Ben, about trying to have a business that is resilient no matter what is thrown at you. And let's just talk about what is being thrown at you at the moment, because group revenue declined 1.8%, a reduction in volumes in what you call challenging market conditions. Has there been any improvement in the domestic market?
I think in terms of if you look at the three sectors in which we operate, so Travis Perkins operates in the new build market, the repair, maintenance, improvement market, and in the infrastructure market. I think if you look at infrastructure spend, you look at things like schools and hospitals and prisons, we are starting to see money coming through in those areas, and that's been positive for part of our group. But I think when you look at residential new build, you probably know as well as I do, the sort of residential new build numbers are as low as they have been for a long time. And in that repair, maintenance, and improvement sector, that really comes down to consumer confidence about investing in their own home and feeling that that's money well spent over the medium term. But certainly in terms of infrastructure projects across a number of the different parts of the Travis Perkins Group, we have seen business starting to pick up and business coming through in those areas.
We've also seen the backdrop of the Middle East continue, that uncertainty from the oil price, the energy story, and what that is doing for inflation, the products that have been trapped in supply chains. How's all that working out for your business?
So a lot of heavy side building materials are manufactured and sourced in the UK, so the transport link is relatively short. Where we've been seeing pressure is literally on diesel fuel. So we have thousands of vehicles on the road across our different branches in the UK, and we've been spending upwards of more than £50,000 a week more on diesel than we were before the crisis, and that really is where we've seen that bite. a little bit of product being imported from the Far East, but the vast majority of building products are sourced within the UK, which is why I think construction has such a great knock-on effect in terms of UK economy, because every pound we spend on construction, there is this knock-on of manufacturers, of transportation, of product being sourced in the UK and used in the UK.
In terms, I know we spoke about the sort of house building policy and construction policy and the joined-up thinking approach to government that you would like to see. But I just wonder specifically on the employment policy side of things. A lot of businesses have said that the national insurance hike in a couple of budgets ago has really kind of deterred them from hiring. What's your view on what this administration could now do to encourage employers like yourself to take on apprentices, to take on staff, and try and get that economic growth that's been really elusive in the UK?
And I think part of it comes back to what I said just a moment ago, which is if you've got a plan that you can look forward to with confidence, then whether you're investing in your property, whether you're investing in your distribution fleet, whether you're investing in bringing people into the business, you feel that's a worthwhile investment because there is a market there to go into for 3, 5, 7 years going out. Simplification of things like apprenticeships and so forth is really important. And I think if I look back to when I left school, which I appreciate is a long time ago now,
Not that long ago,
the
sure.
vast majority of my friends left school and went into some form of apprenticeship, and it was seen as a long-term career move as opposed to something short-term. And I think we need to get back to a point where people can look at careers either in distribution in businesses like Travis Perkins, or as an electrician, or as a heating engineer, or as a bricklayer, and see that as a long-term career view. And if you've got that clarity of vision over the medium term, then I think people will continue to invest, because most people in the UK want the UK to be successful, and we want the UK to be a better place to live and work.
We've spent a lot of the interview talking about fiscal policy and government policy, whether it's right for your business, which is so fascinating because typically we'd be talking about whether the cycle was helping or hampering the business, which sort of says something about how broken the system is if we're having to talk about this. I mean, the question I actually wanted to ask you is whether interest rates are getting in the way or whether they're actually proving somewhat of a tailwind at a lower level now. So how do we think about the credit side?
I think if you look at the residential new build market, there is absolutely no doubt that there is a nervousness around mortgage rates. So there is a feeling that we'll probably get maybe a 25 bips rise sometime over the summer and maybe one more later in the year in terms of the base rate. And I think if you're looking at committing to moving home or committing onto your mortgage, then there is this uncertainty around, well, I can afford it now, can I afford it in 6 months' time? Is it going to make a difference? But I think probably we went through a long period of interest rates being almost zero and mortgages being almost free. And I think, those days, in my opinion, have gone, and we need to get used to where the interest rates are now, bubbling around the kind of level where they are, maybe slightly lower in the medium to long term. But I think if we can have that sort of view going forward that people feel, okay, it might move by 25 bips, it might go up, it might go down, but in the realms, if they feel confident in their employment and they feel confident in the affordability of the mortgage they're taking on, that will help to drive, irrespective of whether we get some kind of stimulus in residential new build from government anyway.
Gavin, it may seem an odd question to ask, but every interview, AI comes up in some form. I just wonder if people out there are looking for a safe harbour where it's untouched by the AI changes and influence, is your business one of them, or is even construction and the building trade being affected? How is it affecting your plans and the way you run your business?
So within our distribution business, primarily what we're looking at is how can AI drive efficiencies in back office setup, in inventory management, in logistics planning, in call center management. It's not so much about somebody standing at a trade counter, handing over the product to the counter and being replaced in 5 years' time by a robot who looks like one of us two. But I think there's absolutely, if you look at industries like ours, I mean, we employ 17,000 people in the UK. It's almost a 5 billion turnover business from about 1,500 different locations. We have to make sure that our tech and data capability is right where it needs to be to make sure that we don't get disadvantaged against other businesses that are utilising it.
Gavin, it's been a fascinating conversation. Thank you so much for joining us around the set. Gavin Slark with us, CEO of Travis Perkins. Shares in AstraZeneca closed down 9% yesterday, the stock's biggest drop since 2020, as investors gave the cold shoulder to a reported merger with US rival Bristol Myers Squibb. Questions have been raised about a looming patent cliff at BMS, which could affect half of the drug maker's revenues, plus worries over the disruption to both companies, especially in R&D, if they decided to merge. And a quick roundup of this morning's earnings. Bayer swung to a profit in the second quarter as net sales rose by more than a percentage point, just under 11 billion euros. Now, the company slightly hiked its group sales forecast for the year, now eyeing as much as 46.7 billion euros. Lufthansa adjusted EBIT more than halved in the second quarter compared to a year ago, with the company pointing to the high cost of jet fuel as well as labour strikes. The airline also cut its profit guidance for the year, citing heightened uncertainty from fuel price volatility. And Aramco has reported adjusted second quarter net income of $33.4 billion, broadly flat on the quarter and up by a third on the year. The world's biggest oil producer recorded an average realised crude oil price of just over $108 a barrel in the period. President and CEO Ahmed Nasser said the first half was defined by resilience and agility as it managed regional challenges. Finally, HSBC's first half profit jumped more than expected, up by almost a quarter on the back of higher rates and surging wealth management revenue. Emily filed this report.
HSBC first half profit jumps 23% to $19.5 billion, beating expectations on rising net interest income and fee income. Revenue up 11% to $37.7 billion. Group CEO George Al-Hadary said HSBC is becoming the stronger bank he set out to build and a bank capable of achieving more. He remains confident in achieving banking NII net interest income of at least $46 billion this year and a return on tangible equity of 17% or better for 2026, 27 and 28. Buybacks are now resumed after a three-quarter hiatus following the privatization of Hang Seng Bank. A share buyback to the amount of $1 billion is expected to be completed by the Q3 results announcement. The bank booked $2.4 billion in credit losses in the first half, which includes a $400 million charge linked to fraud-related securitization exposure and a $200 million charge related to Hong Kong's commercial real estate sector, and then further allowances to reflect uncertainty from the ongoing conflict in the Middle East. Reporting from Hong Kong, I'm Emily Tan.